Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with two volume profiles. The first one on the weekly, where I have a volume profile of this range over here in 2021, and you can see that the value area low as well as this white box was a support resistance area. Support, resistance, resistance, resistance. Eventually we closed above, increasing probabilities to move to the point of control. Closing weekly candles above increases probabilities to move to the value area high. Now when we look at this range, you can see that we spend a lot of time in this range previously. So hey, what are the probabilities to just go up in a straight line and not range in this area? Now for me, also from an Elliott Wave point of view, on the high time frame, probabilities for me are not high to just do that. I think probabilities are higher to continue ranging at least for a little bit inside of this range between the value area high and the value area low for the upcoming months, before eventually we then decide to move to the upside or continue to the downside for lower prices to come. If we then look at this more local volume profile of this range over here on the more like daily time frame, then you can see that the value area high of this range is very nicely respected. I have 2 wicks inside the value area high for then a bit of a rejection. Now when we look at this local structure over here, it looks very corrective. More about that coming up, of course, but the point of control here is important support at 38.9k, and after potentially hitting that with one of the scenarios I have in my folders, we could be looking for a continuation to the upside, where we then still have that value area high at 49.5k of the bigger volume profile. If we look at the medium time frame bullish scenario, we are looking for one more move towards the upside in then a 5-wave structure, where the Fibonacci's for a wave 4 are pulled from the low of 2 to the high of this wave 3. Most common target area for a wave 4 is between the 0.236 and the 0.5, which is between 40.3k, which has already been touched as you can see, and 35.3k. Now of these 3 fibs over here, the most common target area of a wave 4 is the 302 to the 05 area, which is in nice confluence with this previous range as well. The invalidation for a wave 4 is the 0.618 in case price would do this at 33.1k. In this scenario, we then expect price to move towards the upside, towards that 50k area, towards that 49.5k area as well, and then observe the reaction around 50k. What I would prefer to see is either for price to not hit 50k and end somewhere just below and then move to the downside, where people trying to sell 50k are going to miss out and have to sell later, or price pushing above 50k to maybe 52k or even 53k and then look for a move to the downside, as then people might become very greedy, fear of missing out, thinking about all-time highs. We passed the 50k psychological level and then price moves towards the downside. In the more bearish scenario, we are already looking for the high of wave 5 being in. We already have then a finished 5-wave structure. We're looking for a move to the downside, where if we're looking for a wave 2 and then potentially a 1-2-1-2 continuation, then your most common target area is between the 05 and the 786, between 34.8k and 29.1k. The 382 is a less common target for a wave 2 at 37.1k, and the 886 is rare at 27.1k. Now when we zoom out, however, and I know I still have to make a high time frame macro cycle video, as the past 2 weeks I didn't have that opportunity because of being abroad in Riyadh, but we could also count this as a 1, 2, 3, potentially then a 4 and a wave 5. And if we are thinking about a wave 4, then we can switch the fibs to the wave 4 target area, and in this case we are thinking about the 0.236 to the 05, which is then between 40k and 34.7k for then a higher time frame 1, 2, 3, 4, long 4, and then a wave 5 to the upside, ending again somewhere around the 50k's and looking for a move down as well. Now in the low time frame, or on the low time frame, we are of course in this range already for a while now, and one of the scenarios that could lead to a retest of that point of control at 38.9k, shortly dipping above the value area high, is this flat scenario here. In this scenario, we're then looking for an ABC expanding flat. Wave A is already in over here, currently working on a wave B, where we are working on a 3-wave structure to the upside and then a zigzag for wave Y, ending B, looking for C to the downside. If we think about the high of a wave B, then we have to pull a fib from the beginning to the end of wave A, toggle on the wave B expanding flat targets, and then your most common target area for wave B is between the 1.236 and the 1.38, which is between 45.7k and 46.4k, which is also in confluence with the golden box that we have over here for some additional resistance between 45 to 46k. You can also see that this wave C could then end somewhere around that point of control area, which is the golden box here between 38.6 and 39k, and just below we have some additional support, a couple of boxes here, 37.6, 37.7, 36.9 to 37.4, and then over here we have 36.3 to 36.5, so a couple of areas of support to the downside. In the bearish scenario, we're not going to see new highs anytime soon over here. We're going to be looking for price to move towards the downside. Here we are then looking for a 1 or A, 2 or B, and then a wave C or wave 3 to the downside. And this scenario would match a medium time frame bearish scenario where the high is in and we look for a deeper retracement to the downside. The problem, however, that I have with this scenario is the final wave to the upside. Many charts have this as the highest move. This high over here on many charts is higher than the random wick that I have. On other charts, this wick over here is lower than this one. In that particular scenario, this then has to be your final wave 5. If you're looking for the end of a high time frame, right, 1, 2, 3, 4, and eventually a wave 5, your final move has to be 5 waves, with this then being a 4, final 5 towards the upside. But the problem I have here, as explained also like last week and the week before, is it's very difficult to count this as a nice impulsive structure. It doesn't really make sense. There's either overlap between a wave 1 or a wave 4, and a diagonal doesn't work as well. It looks much better as a 3-wave structure compared to a 5-wave structure, which for me lowers the probabilities of a bearish scenario where this is really the high of a wave 5 and we are really looking for a big turnaround and then a 1, 2, big 3 to the downside. Now an ABC could be a possibility, but because of this being a higher probability for me of being a 3-wave structure, it also decreases the probabilities of an ABC. But nonetheless, in this scenario, we are then looking for a wave 2 or a wave B. And above price, at the moment, we do have this blue resistance box between 43.5k and 44k, which includes over here a weekly level over here at 43.793, as well as a daily, right, at the same level over here. And we have the point of control of this range there as well at 43.8k. So those are the two main areas in this blue box, currently ranging on top of the white box, as you can see, potentially a support resistance flip. And yeah, preferably price moving up to that blue box, looking then for a wave C in this scenario to the downside, where for a wave C, the common target area over here is in confluence with that golden box as well. So that is quite interesting indeed. Now the main question is as well, is the low in and is this move to the upside a wave 1? The moment you get something that looks like an impulse, you always have to think, is it a wave 1? Is it a wave C or is it a wave A? Now in this scenario, we would then be looking for a wave 1, retracement in 2, eventually a 3 for continuation. But that means that this has to be the low of your corrective structure or the end of your corrective structure, which is only possible with a WXY, because you can't have this as a wave A, B, and then a wave C, because your wave B is not high enough in this particular case. If you're looking for a flat structure in a 3, 3, and then a 5, wave B has to retrace to at least 90% of wave A, which isn't the case. Now, when we think about a zigzag in a wave A, B, and then a wave C, if this is a wave C, then this wave C did not go below the low of wave A, which is incredibly rare. Really low probabilities that that would be the case. And also, if we think about this being a wave C, you have to think about a diagonal and then a 1, 2, 3, 4, 5, but the problem is that 3 didn't go below the low of wave 1 as well. So yeah, it doesn't really make too much sense. So if we look at the WXY, which therefore then is the remaining highest probability scenario, then we're looking for wave W and then here a flat structure, X a zigzag, and then wave Y can either be a flat, zigzag, or a triangle. Now clearly it is not a triangle over here. A zigzag in a 5-3-5 looks incredibly unlikely as well, because then somehow you need to call this a 5-3-5 zigzag. This is very clear a 3, this is also a 3, and then you have this structure. Doesn't look nice, right? And when we think about a flat structure, then you have to think about an A, B, and then a wave C. But this wave C is too long, as a wave C is not allowed to be twice the length of wave A plus wave B, which then leaves you with this 2 fib time over here that I took from the high, or basically the beginning of A, right? A, B, C, beginning of A to the end of wave B. Double click there, and then you have this 2. You don't want the wave C going past this wave 2, which clearly happened, right? So low probabilities at the moment that this is the end of the correction that we have going on over here, which therefore increases the probabilities of price still looking for lower prices than these lows over here. We also got a double bottom now. Now if we look at the range, then we have a bit of resistance at the value area high over here. We moved from the value area low to the value area high. Very, very nice indeed. Price now left a double top. I do realize on some other charts, this wick over here did take the high that we have there. Now that simply increases probabilities that other charts will eventually follow. But on my chart, we still have a double top, 43,475 here. High number 1, high number 2, increasing probabilities to eventually still look for a bit of a move towards the upside. But of course, we're simply ranging here. Also, price hit the 886 Fibonacci, increasing probabilities that they move to the upside is a wave C or a wave Y. And in a wave Y, we can then be looking for an ABC before then a move towards the downside. And as mentioned, this being a wave C at the moment is also not great probabilities. Actually forgot to talk about that. A wave 1, we already spoke about that. But if this is a wave C, then we have to think about a flat structure, right? And then this being an A, B, C. However, wave B did not retrace to the 0.9 Fibonacci. It actually just missed out on hitting the 0.9 over here on my chart, lowering the probabilities that this is a wave C for then a potential flat, because in a flat you prefer to see at least the 0.9 Fibonacci hit. The only way that I could make this a wave C is if we think about this being a wave A, this is your B, and then this is your wave C, where you then pull a fib from the low here to the high of your wave A, toggle on the expanding flat target, and then you see that your wave B over here hit the target area for a wave B, and then this has to be a wave C to the upside, where the minimum target should be taking this high for an expanding flat, which already happened, as you can see. Little bit of a thing, however, is that if this is your wave A and this is your wave B, you can see that wave A is incredibly short compared to your wave B, but at least it is a scenario that I like to mention in this video so that you are aware in case price does move impulsively or potentially for lower prices to come. Right now, if we look at the CVD divergences, these bullish CVD divergences almost played out, as this high over here is not yet taken, right? And on the lower time frame here, if we go to the 15-minute chart, then we had these bullish CVDs here played out, bearish CVDs here played out, and this bullish CVD also already played out as price took this high. Now with this drop towards the downside, let's have a look if anything changes. We do have still some bullish CVD divergences, higher low in price, lower low on blue over here. It is the second divergence with this low, but it is still good to know. We do have at least a little bit of bullish CVDs over here, so we continue to observe the reaction locally. If we then finally look at the probabilities of the different scenarios, then on the medium time frame, the probabilities remain higher to look for higher prices. On the low time frame, also still looking for higher prices. However, because of this move to the upside being a higher probability of being a corrective structure and then a wave A or C, right? The probabilities are higher in this corrective range to still look for new lows. So yes, we are looking for highs to come. We have bigger bullish CVD divergences as well, right? Potentially an ABC for an expanding flat, but nonetheless, the probabilities are higher in this range to still look for new lows eventually. And on the micro over here, looking more locally, probabilities at the moment are higher to look for at least one more move towards the upside. We do have that double top over here as well, and we have the blue resistance box, of course, just above. And if we would count this move to the upside as an impulse, then we can count it as a 1 2 1 2 3 4 5, potentially 4 5 over here, where if we then take a fib from the low of this wave 2 here to then the high of 3, toggle on the wave 4 target area, then you can see price did hit the 0.236, which is a target for a wave 4. The 302 to the 05 is a bit more common at 42.4k and 42.1k, something to keep in mind as well. The 0.618 would be an invalidation for an impulsive move to the upside, but as it stands, the probabilities would be higher to see that blue box hit. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.